So I think the most significant thing about BTC in the BTC chart at this moment in time is the breakdown of the diagonal. That's the most significant thing. And we've been talking about this diagonal and the channel formation that we'd seen on BTC, and obviously what we'd seen on Sol as well, and a number of other markets that had chosen this this kind of diagonal formation as the consolidation period. So we've seen a breakdown on BTC from the diagonal on the 3-day. We've also seen the RSI 50 being a rejection point here in terms of the trend, so an area of the higher time frame that we expect to see a rejection or a continuation of the prevailing trend, the macro trend, which obviously is to the downside. It's not a great look for BTC. And unfortunately, the part that I kind of struggle with from this moment in time is, I've always kind of put myself into the category of, I think this market ranges for a longer period of time versus legging down again significantly. So again, we'll go on to things like the CRV market that has been my reference point later on, but I still see these being the establishing points of ranges versus big breakdowns. However, that being said, that is just one line of thought. When we get a breakdown from a consolidation period like we've seen here, which has been, a good couple of months of consolidating, and we get a breakdown again, we would still have to consider naturally continuation of the trend and therefore fresh lows, right? That would be what you would typically just very simply would go for. Breakdown of the consolidation in a downtrending market, continuation, and the market will seek out fresh lows. 80% retracement from the high is still 13k for BTC, so that is still kind of the level. It's also obviously this kind of big region through here that was resistance for a very long time, and getting anywhere back down to this level would be the full 80% retrace from BTC from the all-time high. BTC didn't rally as hard as some markets, but BTC also held up better in terms of percentage down from all-time high than some markets as well. Ether's already done 82% downside, I think, and BTC's hovering around the 70% or whatever from here, from all-time high. So BTC wasn't as badly affected as some markets were during the sell-off. But it was also far weaker, obviously, in the bounce from the lows. Still makes it a market that kind of is pointless to be interested in right now, I suspect. We've seen BTCD increasing quite dramatically over the weekend. BTC has held pretty good strength compared to a lot of alts that have been making fresh lows, whereas BTC has held up. Again, narrative stuff is at a really early point for now. The key thing from this is breakdown of the 3-day channel and now monitoring the reaction from here. Fresh lows. If we get fresh lows, best case scenario, we see the run on 17. I mean, best case scenario is we hold 19, right? We take this as the bottom of the new range, and we take this as the high of the range, and we move between these levels. I guess that's the best scenario. Worst case, 13k. I think fresh lows pushes all the way back down, full rotation back down at the higher time frame RSIs, and see you guys at 13. Lower time frame price action, good intraday price action for BTC, but developing again this resistance region through here now at 21.5, so we're starting to see the lower time frame resistance through here. We may see some sort of grab on the upside potential through here, but I think this is a relatively decent pivot point for BTC currently, and then we can obviously take the lows down here as well. So I think for now this is what we're playing in terms of our consolidation region, and now we're just waiting to see what the next market move is going to be. If we push back to the upside, I think 22.7 is probably on the cards, this little cluster inside here. I don't really see a reason for us to drive any more kind of dramatically to the upside at this point in time than getting back up to an area like this. We could even just consolidate here. We could even just consolidate in this tight range for a period of time. I don't necessarily think we even have to have the strength to, make that move up here. I mean, what is this? Like 6%? So sure, we might get that. We'll go on to indexes later as well, and we've moved first and we've moved stronger. So it's not necessarily a good sign if indexes do continue to hit the downside this week. Yeah, for the range scenario, I assume you expect SPX won't have another significant move to the downside. Yeah, and so I think that's probably been one of kind of the key thought processes, is that I give a lot more credit to the fact that I think these markets can range, and it's not an option that most people consider. I think most discussions that I've seen recently have been on whether or not the upside drive continues on crypto. So ETH challenging higher, and then you start to get like the merge narrative that, you know, kind of keeps going in on that side. And, you know, a lot of people believing basically because of the merge you weren't going to get a dip and ETH was just going to keep on climbing, and why would it retrace, why would it correct, why would it do anything? And then you've got the other side of the argument, which is like fresh lows. It's fresh lows, it's doom and gloom, it's no one wants to buy crypto, everything's dead, fuck off for 2 years because no one's going to give a shit about it for that length of time, and it's all misery. And like, I'm kind of right now straight in the middle, and like I think this market ranges for a period of time. I think we may sweep lows, I think we may trade down to the lows, but I don't necessarily believe that this market will fully capitulate fresh higher time frame lows at this point in time. The more likely scenario from my perspective is this market bores you to death for the next 12 months. You know, that's what I think is probably more likely to happen, is you just get bored by this market, you get chopped to pieces. There are so many kind of macro bias flips based on the range, and essentially we're just going to go sideways for a period of time. That's what I would like to happen. And like I said, big caveat to that is the fact that BTC is breaking down from that higher time frame diagonal, and therefore, you know, naturally we would lean more towards the creation of fresh lows based on the structure that we have there. And then we'll do ETH. This is the really bad one. Like, this is the really bad one, I think. I spoke about how significant 1700 was to me. You know, this level here was so important to me. 1700 was absolutely what I wanted to hold. It was absolutely the level that I think the market should have held at if we had any intentions of continuing to the upside. The loss of 1700 in such a spectacular fashion is really a hugely negative sign for me. Therefore, the first thing that we would be looking for at this region is a retest back into 1700, so the 1750. I think if we get back into this level here, then this is going to be the short, because I wouldn't expect us to trade too much above this. I'm also not sure why the market would give that retest from here. You know, if BTC makes the push, the 6%er, then sure. I'm not necessarily sure why the market is going to give that push at this moment in time. This is the biggest trap I've ever seen. I really hate like the kind of trap mentality. Like, it's because it's just nonsense, right? The way that I see it, unless that you have direct data that would support the fact that volume would indicate that this is a huge trap, and you have previous points that you could also demonstrate were trap-like from the same structure. To me, whenever people call things a trap, it just feels as though it's just to be contrarian for the sake of it. Like, it's just to take the opposite side of the argument for the sake of it. And I think it's one thing that fucks up loads of traders, is looking at a region like this and saying, oh, this is a trap, right? This is a bear trap here, because what we're going to do is we're going to do this. I think it's so much easier just to take the market at face value, and just play around what the market says. So, you know, losing 1700 is a hugely negative sign and a very bearish look for the market. If we rally into 1700 and reject, it's a very bearish view for the market. If we rally above 1700 and flip it again, it's a very bullish view for the market. It's just super simple, right? Like, I don't need to think about whether or not this is a trap or not. All I need to think about is what's the interaction with 1700. If you're below, then I'm bearish. If you're above, then I'm bullish. It's super simple. I really think there's no point kind of, taking that contrarian view about things being a trap. Like, yeah, sure. Like, maybe. Like, if it's gonna be, then fine. I'll get long above 1700 again as a technical signal. To me, it looks like shit. Ass markets. Sell-off last week was reminiscent of the PA around 3AC collapse. You reckon someone else is blowing up? I mean, they were pretty aggressive on ETH. I'm not necessarily sure it means that anybody else is blowing up. I just think that ETH was one of the more naturally bullish markets. I think that it was just an easier target point, but somebody was very aggressive on the ETH side of things. Targets for ETH? I mean, the obvious one is here. The obvious one is this 1200 level. I think this is the obvious target region because this is where all of the impulse was from the breakout. This is where the consolidation was prior to the big move. So coming back into this region would, for me, be indicative of, a pretty decent retest. Getting below 1200, I mean, pick a number in the 3 digits. Like, it's pretty much nailed on. So if we do get down into this level, which represents another pretty sizable drop from this point in time, then 1200 I think is, last stand. But to me, this should be holding. This would be a decent place for me to think about bidding. Above 1700 looks good. Back down to 1200 and holding, can see a bid. Fall below that, try not to think about it. What's next up after 1200? I mean, if you just load up any higher time frame ETH chart, you would say 400. If you were just going on pure technicals for what the charts look like, you would just say $400. 1700 was so important. And then on the weekly, the weekly level is actually up here anyway. So the weekly kind of, zone is basically through this region here. And so I think, again, from a weekly chart, this looks like a nice rejection point. The RSI is in a really poor position here. But personally, I want to see another rotation down here. And then I want to see an awesome oscillator divergence here. That's the sort of setup I'm looking for. That setup, I'll take happily. But that's the sort of setup I want to see. Would you say the speed at which it reaches the support or resistance is relevant when it comes to holding the structure? I would say that, it's probably actually more based on like breakouts or breakdowns are probably more significant. Like in terms of speed. Because, I think Donald said previously as well that he doesn't really like markets that come back down for almost like immediate retests at areas they break out from. And so I think speed of retests is a negative. I'm not necessarily sure about kind of speed of tests into support and resistance in terms of, your original point. I think it's more like on a breakout of something coming back down very quickly for a retest is never usually a positive sign. Just in general support or resistance, though, I'm not sure I would have anything to add to that side. Would you go full size spot if that setup is presented? Yeah, 100%. I would be a huge ETH maxi at that point in time. Looks like your jesting chart that you showed the 130% rally in 2018 might have actually been spot on. Yeah, don't worry. Listen, I'll take hype for it. I'll delete every potential source of that being the bait chart, and instead I will just act as though that was completely logical TA. Plus, I will also teach you that TA for $750 a week. I'll make sure we can spin that positive. Do you need a weekly candle close around 1700 area to flip either bullish or bearish? Not a weekly. Like higher time frame is fine. So like daily is fine on the crush through 1700. That's a big enough signal in itself. What would you do if you were holding 1720 ETH spot right now? I wouldn't be able to sleep at night. I would be in a cold sweat constantly. Does trading get easier when your capital gets bigger? No. Like it's the same premise. For some people it gets harder from kind of the money psychology perspective because they're dealing with larger sums, larger figures. It's harder to lose. When your portfolio gets bigger, you've usually got more experience, and so it kind of is like a hand-in-hand thing that you would expect a better performance overall when money started to increase. It also helps with things like building portfolios and kind of thinking about, spot values and where you want to be exposed to the market and what markets you want to buy. And then, it becomes easier to take a punt on shitcoins because you basically got more at your disposal that also then has the potential to snowball into larger sums. So I think from like a spot portfolio perspective, I think yes, definitely makes it a lot easier because, a lot of the shitcoins that I punted paid off big, whereas with a smaller capital size, I may not have, number one, had the same amount of capital put into them, or may have ignored them completely in terms of being more focused on fewer areas. What about Solana? All right, that's a decent one to go to our third chart for. Another breakdown of the channeling price action. So big breakdown. Rejection at the 50 level here. Weak crossover again in terms of the awesome oscillator here. So look at the last one. This is the weak crossover that we had on the 3-day last time. We got a better push in terms of RSI. We had this crossover here, and then we just came straight back down for another leg. So last time, you know, basically it's exactly the same setup. So we had the high here, then all the way back down to the lows. So we took 81% from the high that we formed in April, just because we had this really weak, pathetic crossover here, and then we just came straight back down and unloaded the bearish momentum again. Now let's just say, for example, that the same setup played out again here, right? You know, just for fun, because you know, everybody's fine right now anyway. So $8 sol, right? Like that would seem like a good price point. This isn't fun. Oh shit, we need a bait chart. Yeah. You hit the nail on the head here, 100%. How can we add more confluence? How can we add more confluence to this? We need something else. Like, this hasn't got quite enough juice to it. Like, there needs to be another factor here. There needs to be another factor. Okay, here's how we freshen it up straight away. We delete RSI. Right, so that doesn't give, that takes away from the how similar these regions look. Give the weak crossover. What was the rally here? Just please tell me the rally is so much stronger here, right? 92. Shit. 92. Maybe if I take the low. Okay. All right. Here we go. Okay, so if I do that, that means I have to swap it to a line chart as well, so nobody pulls me up on the wick. Oh shit, then I lose the top wick. Yeah, I tell you, this is a fucking art, man. It's an art. Oh, that's looking fine. You got to put the big line in here, so everybody knows it's the target at $8. And make it 82%, 86, 84. Can I, if I take it to the bottom of this wick here, can I get 85? I mean, fucking no one's going to zoom in this much, right? Let's just make it 86 and tell everybody it's the same. Why are we even messing around with it? We'll just say that's the same. Yeah, fuck it, that's fine. All right, I think that's probably pretty good. 86% up. It's 87? Fuck me. I'm going to be going from this. I'll be able to get this former low soon. 87, that's fine. Okay, I mean, that's pretty decent, right? Can we get the full peak in here? Everything looks good. We agreed. Crossover on the awesome oscillator looks great. Yeah. All right, that'll do. Let's post that. Oh, actually, we'll just put sol. We'll just put the cash tag in there. That was good. I enjoyed that. Thank you for thinking about my Twitter engagement numbers. Back to the TA stuff, right? Back to the real TA stuff. Breakdown again from the 3-day channel. It's not a good look, but we would at first expect, obviously, kind of the 29s to hold up. And again, if I'm right in terms of ranging through this region, then I would expect Sol to have formed its range highs here, a little bit like CRV has done. And then we would expect us to challenge the range lows, which at this moment in time is still the outcome that I'm looking for. Completely puke out the bottom of the range low. And I'm doing air quotes when I'm saying range low. For now, it's what I think might be the range low. If we just continue puking straight down, obviously it's not a range and it's just consolidation before another leg down in the downtrend. So for now, I'll leave it in. If we puke out the bottom, it's another leg lower, and on another leg lower, you know, we're going to be heading back down to the 20 levels and potentially back down to the 16s here. It can go up or down. No, I think that's really not what I'm saying. Like, I think if you listen to it, I think both outcomes that I said were down, right? They're both outcomes are down. It's just how far down. So we're talking about whether or not it's down or down a lot. That's really the two options that I'm providing here. You're legit cringe if you think Sol does this. This is not stabilized. Let's take a look how not stabilized is performing. Let's just do CRV, because again, I think that's chop market. So we're around mid for CRV currently, dipping below it. Lows down here at 60 cents again. It's a big range. They're huge ranges. There's the one downside of the kind of the overall higher time frame thought process that we have, or I have, for the markets at this stage in time. You know, they are huge ranges that we would develop. You know, it's not out of the question, but still, there's a lot of room for playing around. Lower time frame, doing what the majority of alts are doing through this region, which is forming these 4-hour bull divs. So we're starting to see the 4-hour bull divs developing through here, and we're also seeing that supported by the awesome oscillator. This is exactly what we want to see when we're looking at alt markets. We want to see the divs on RSI, we want to see the divs supported by the awesome oscillator, because we want that double confluence. Far stronger playouts from markets that have double confluence when we get divergences. Where we are now is this it? And is this the rally? Through here, and if we get that rally, probably looking for, you know, 10, 12, 13% through here. At worst, we're going to be looking to take this cluster of highs, I would have thought, around 110. The other side to this is, do we get another leg? Do we get one final leg lower? Do we get that? And do we get this? So I think we're kind of currently at this decision point where we're either going to get the strength and see the strength, and we're going to start taking out some of the highs that we see on, you know, BTC, ETH, and various alts, or whether or not we get the additional leg lower. Now, the way that you accommodate this in terms of if you're looking at playing on the back of the divergences is you've pretty much got two kind of, you know, thoughts here. Number one is that you're taking a position from somewhere in this region and you're not expecting there to be a third low, in which case you're just taking a straight up divergence play, which is from here, first take profit around here, and then second take profit if it can squeeze it up towards this little cluster over here. The other thing that you're doing is you're taking 50% of an entry here, and then you're saving another 50% of your entry if we make a triple divergence down here. It gives you an average entry of this, it gives you a stop loss here, it still gives you your first take profit here and your second one up here. So there are a couple of ways to play this. Whether or not you believe or want to plan for a third leg is your choice. You're either just saying, this is a divergence and I want to play the impulse that we see to the upside, or you're saying, there is a divergence, but I'm concerned the market isn't strong enough yet to completely rally through this region, and therefore I think there's a chance that we break down for another leg lower. And most markets demonstrate this. You know, ETH is another market that has it. Right. The only problem with ETH is it's not supported here on the awesome oscillator. So it's why some of the alt markets actually look slightly better in terms of being long on than ETH. I actually think one of the best current markets is actually this. And it pains me to say it, but I think this is one of the better looking markets, right? And I'm not trolling you. I genuinely think, from just a straight up TA perspective, right? If you were to hide the ticker and I looked at this chart, I would say that this is one of the better setup markets. And the reason that I say that is it's got one of the best divergence structures, supported on both AO and RSI. The daily RSI has come straight back down to the 50 level after the initial rally that we saw through here. Straight back down to the 50 in terms of retesting. And we are now sitting on top of the breakout region. Okay, so we're now sitting on top of this original breakout cluster here, around 1260. So I genuinely think this is one of the better looking markets. Let's take a look at BTC. Where's our level? Over here. So this is the original resistance. It's really nice whenever you see reactions like this on a market that you've been looking at. It's a really good one to see. So whenever you draw your horizontal levels, any candles that you see like this are usually a really good indication that the level that you have drawn is respected and significant, because there's a very strong reaction around the push through this level, which adds weight and significance to this level. So if you've got any lower time frame levels, medium time frame levels, whatever it might be, like this volatility through your levels is usually a really good sign that the level is legit, at least at this point in time. Yeah, so level's good, attack looks good, rejection looks horrific. We got a minute left, right? We can save it in a minute. Oh, well, let's just stay on the 1 minute chart. We got a minute and a half left. This is better than the futures open. All right. So I mean, really not a great candle close for it. The level is maintained. The level still looks good. It looks like a really aggressive squeeze to the upside. Just wait and see what is to follow. For now, based on the fact that we have zero price action after it's just happened, we have to say a negative event. But we've seen moves like this before that then the next candle breaks us out. So on the face of it, not great, but we're still very early to be making that overall call to say this is trash, right? We know the level is still good through here. This level looks as though it was respected in terms of sellers acting above it. And we would expect to see further moves into this level also rejected if this is to hold and we're to begin this downside move again. Does that count as a lick grab from 22k? I mean, we're still shy. I think it's mainly just a clear out of this region. This is Friday's price action, yesterday's, and then into today's, and so it just looks like a clear out of Friday's action. But where was futures close? 21,180. So there's going to be a gap. There's going to be a gap up if we were to open here anyway. I suspect we'll end up somewhere around where futures settled on Friday when the market comes to opening. You take a look at ENS. When it broke back into its old daily range, I took a long to the range top, which I then round tripped. Yeah, okay. ENS has got a really good, or had a really good range breakout anyway, so yeah. So ENS falling back below the kind of 13 level. It's trading above it at the moment. Well, it just sounds as though you should have just taken profit, right? Like if this is the area that you played into, you should have just been taking profit on that. I mean, that this is the old top. I suspect that your thought process changed, and when you started to see this bounce, you assume that maybe either it holds this level and just rallies, and you've caught a fresh low. But you really should just be cashing out of this position. It's a 6% rally counter trend against something that looks like this. It's a really good opportunity to get out of your position. So I would say fundamentally an issue if that's what's happening. I took the trade 2 weeks ago, expecting it to go towards 22. I mean, oh, you round tripped this one. I mean, yeah, unlucky, but probably should be de-risking. Got divergences developing up at the highs. Big divergence here between these legs. So just trying to incorporate things that give you an indication of when momentum is slowing down for your long positions would have helped you out a lot through this region. You can see the drop off in momentum. You can even see locally in this patch here, we diverged all of these highs in here, across here. So I think believing what momentum indicators are telling you, if this is what you took, then making sure that you're closing down positions when momentum is clearly telling you it is stuttering and stalling at certain points of the chart. Nice little back and forth price action. Straight back up into the level for BTC. What do you want when you want to long and alt with a good setup, but BTC looks like shit and has a high probability to sell off? Because usually when BTC dips, it takes everything down with it. I still take the setup. I try to take everything independent of BTC. I don't like using BTC as the gauge for my alt positions. I've always been kind of the same. Unless it is very, very significant in terms of, there is something on a higher time frame perspective that is occurring, I would always take the alt position regardless. TRB. The beast continues to trade higher. Looks unstoppable. Very, very strong market mover. Looks really, really good through here. Like, it still looks really good. We spoke about the significance of 42, so we want to see 42 continue to hold and trade above. As long as it stays above 42, it looks as though it's just going to continue to trade to the upside. It reacts, and it reacts very strongly, but it looks like a very strong market overall. TRB is something that I have started to become obsessed with in terms of the price action. It's a very, very interesting market. That's all I will say. And I think if you look at, if you spend any time on TRB on kind of the higher time frames, it's a really, really interesting chart setup. I'm still long, but I have a short open, but I'm long on TRB as well. So I suspect, or I would like to see higher prices. I don't think it stops. I don't think it stops here. I think it's too aggressive. Yeah, 50. I mean, like 50 is like the obvious round number that you would just go for from this region. And like it can do it in like 5-minute candles, which is what's crazy about TRB is in general. You take a look at some of the 5-minute candles in here, like the one we had earlier today. This candle is insane through here. And look at the wick on this. Like even from here, well, let's just take the 5-minute candle as a whole. So it just does like 8.5% in a 5-minute candle. So it's a ruthless market, and it's just been continuously smashing against shorts. I'm not necessarily sure it stops here. You know, I think that the 50 number is pretty decent. So we'll see. We'll see. It's a super aggro market, and I really wouldn't recommend anybody trading TRB. I've been spending quite a lot of time on the lower time frame TRB chart, but I really wouldn't recommend just diving in and messing about with TRB. Like the volatility is too big. It will really blow you up quite quickly if you get a couple of incorrect decisions on it. LDO. Similar divergence to what was on ETH on the 4-hour. In terms of kind of, you know, the low down here and the divergence and the, you know, kind of the narrowness of the divergence down here at the 175s. It was another one of those markets that was in a very, very clean channel. And actually, I think it gave you a load of time to enter the short side. You know, from here, it didn't really break down. It really didn't impulse for another 8 hours after the breakdown from the channel. So I think it gave you a really good opportunity to try and get short on this. I also think if you take a look at the way the RSI acted in this region, we've got the push down below the 50. We struggled here the whole way, and then we finally got the impulse. So I think this was, you know, a really clean market. It was very similar to Lux in the way that it broke down from its trend line at the bottom, and the rally has just been, I think, the play out of the divergence from the lows. You know, given its slightly less liquid alt, it's a really, really strong move off the back of the 4-hour divergence. It's taken out this high over here, back up towards kind of the natural reset point that we would expect. The higher time frames are slightly more interesting because we've started to get back down to this original cluster high here around the 170s, and so it was a decent bounce point from the higher time frame perspective. It's only going to be you know, reactionary in terms of what ETH does. You know, if ETH legs lower, then this is coming down further. Gun to head, 25k or 17k first. 17 in that scenario. You know, I don't see any reason for the market to rally 20% counter trend at this moment in time. I don't see what the catalyst would be after a breakdown of significance. I don't see why we would get a 20% rally. I think one of the other important things is, you know, a lot of people have been talking about a lot of people talked about buying the correction. You know, they were talking about, you know, this market's now correcting, therefore I'm going to look at buying at X level. The correction was the upside. Right? The correction was the rally that we've just seen. That was the correction, because the market is downtrending. So therefore the corrections are to the upside and the prevailing trend is back down. So I've had to hold back on Twitter whenever I see people talking about, you know, buying the correction. Like, no, the correction's just happened. The correction was up. The market's down 80% off the high. The corrections are up. Do you see a 22.5 retest? Yeah, that's the one we were looking at. Yeah. So around 22.5. I think that would be a decent region to come back into. And that's certainly less in terms of percentage. I think it's always important to manage the upside potential that you are looking for on a market. So I think that's one of the important things, is make sure that you manage what you're looking for on the upside. Lots of people will start looking at, retests or regions that we're going to trade back into. And what they'll do is they'll overestimate the market potential in conditions that once again look like this. So let's just say, for example, that you're looking to try and get short. Sometimes people have a habit of doing things like they'll be looking for, this area over here, maybe like, I don't know, even like 23k, 23.5k, and to rally 15% counter trend is a pretty difficult task. So it's always better whenever you're looking for retests to try and manage what you're looking for in terms of upside. For a downtrending market to suddenly rally 15% is a relatively difficult task, especially for a major. For alts, it's a little easier. But for a major to do something like this, slightly more tricky. So you're better off always coming back down to kind of, better figures, and then also not being too strict in terms of the exact level you're looking for. Like you're better off looking for this kind of 7% mark and literally like the last low here at 22.3 than you are going for, here and staying firm that it has to be this 10% rally before you get short. It has to be this little cluster here. So the reason most people get frozen out of the downtrends is because their upside in terms of retests is usually too great. They're looking for things that are kind of, not realistic for the market to perform in its current downtrending structure. Can you discuss the indexes? Yeah, so the indexes are taking out the cluster of highs here on the Nasdaq in this region here. So we took out the cluster of highs. We've seen a very negative reaction from that. We've got the bearish divergences across the last highs here and here. So this region here was diverging. We diverged into the takeout of the highs, and we're seeing the reaction from that now. In terms of whether or not we've kind of seen the correction, or whether or not this is, kind of the first leg in what will be a bigger correction, maybe down to the 12.5s, is, I think, really based on the next few days of the Nasdaq and how the market's open next week. Well, tonight and the next few days. The daily is also, in a pretty poor position here, but I do think there is this cluster over here. So I think the indexes could try and pull that play and then sell off harder. But based on the reaction that we've seen so far, and based on the daily on Friday, they look as though they want to just do this correction from here. And in terms of this, kind of lower time frame correction, I think 12.5 is the sensible area to pitch for. And I still think that this will probably end up being the range. I still think this 12.5 will be somewhere around mid. This will be the range highs, and this is what our overall range will look like. Again, maybe we'll take out this cluster here. Maybe we'll get a breakdown and we'll do this. I think this is where we will take place basically for the next 6 months. I think this is what our range will look like, is something like this. How do you get to this thought? Like I said at the start, I think that people are just thinking in absolutes. It's either moon or it's doom. I don't think enough people are considering the fact that we could just range. I do believe that a huge amount of the negative catalysts are now out in the open, and therefore it's easier for the market to digest that. I still believe that obviously rates are going to have a big impact, and I'm not sure that we're there yet in terms of, kind of the negative news on that side of things. Do I think we've got enough to crush into fresh lows? Maybe. We are downtrending, so maybe. I think it's just another option that we actually just end up going sideways for a period of time. Oh, EOS, yeah, I forgot about that. Good coin, huh? Just holding the low. Super nasty. 190 just looks like continuation. It looks fine. So I couldn't find currently a reason to short this apart from apart from this is up and it's a shitcoin and everything else is down. That's the only reason I could find to short this at this moment in time. I don't think from my perspective, there's not like a technical reason why I would want to short this. I think the majority of technical indicators that I would use for this market would say it's going to go higher. Everything is just like a perfect reset in terms of, you know, the trend. We held the low. So the 12-hour holds the structure and it holds the low. It's created a fresh high. We would therefore expect us to get to another fresh high through here. We've reset back to the 50 level here on the RSI as well. Flick to the daily, straight back down to the 50 level. Immediate reaction, creation of a fresh daily high. Everything just looks as though it's set up to go higher. You know, I find zero reason just from the technicals in order to short this. Like I said, the only reason that I would find is EOS is a shitcoin, and why should it be up when everything else is down? That is literally the only reason that I would kind of come to. Yeah, TRB is also a shitcoin, but it's pumping. Yeah, that's why you long it, right? Like, if it's above a significant level, that's why you look at getting long on it. So I've done quite a lot of discussion of TRB in the Haven, and that's been the play. Right? If you're above 42, it's long. If you're below 42, it looks poor. 42 is the pivot point for TRB. Yeah, BNB. A lot of people asking about BNB. Have I got... Oh, yes, in the scams, right? Yeah, really good reaction from BNB again. 7% on the day. Good reaction. Coming back down towards the midpoint, not quite getting there. And then good rally back up this side. Strong market. Really strong market. Coming back up for the 12-hour retest. Potentially into 306s might cause it an issue. You know, this is the original kind of origin of the breakdown point is 305 and above. So we may run into some issues there. It's just doing the fucking BNB thing again, which is looks as though it's going to make a divergence and then suddenly starts to show some power to break clear of it. But I think we're tagging into a zone now that if we are going to see a rejection, it's going to come from here. 306 is on the push, another $3.50 higher. There's probably better markets to try and short. Do you think the ETC 3-day div is fully played out? No. I think at 25 is the region on ETC that's, you know, kind of the good-looking position. This is one of the priority markets for me to try and position short on, because this has been the market with the 3-day divergence, and very few markets had a 3-day divergence. I also spoke about the fact that this is very close to the last structural high in terms of this downtrending structure. So the lower high, the 3-day bear div, you know, it all added to the fact it looked as though it was going to be a very good short position. And now ETC is holding on to the bottom of this region down here. So diverging into this level, starting to give a bounce away from the level. If this level is lost, then it's 25. Do you ever see 4 impulse divs or not really? Rarely. They can still occur, but they're far rarer. What do you think about the 21.3k level? I long there because I saw an SR zone there and we flipped it. This is just this one, right? Or are you talking about lower here? Yeah, that's fine. I think this level here is fine. I think that's good identification of a lower time frame level. I think you can make a pretty good case of that here. You know, through this region here, it's a good hold of 21.3. So I think, yeah, fine. I think that's a really, really sensible level to have. And then just hoping that the breakout sticks above here. You've got 25 minutes to try and hold this breakout attempt, which I think sets you up really nicely from having a 21.3 to start aiming towards, you know, a little bit more upside through here. Yeah, I think it's just a really solid level. Seems like everyone's short right now on all exchanges. I mean, like, yeah, sure, there's going to be like late shorters into this party. Not necessarily sure that means it's time to just like pile in to like long positions. The market is still pretty aggressive on the downside. 20 minutes left. This level's still holding firm at 21.5. Where did you learn the most about trading? Mentor or just research and experience? Research and experience. It's the primary. Just kind of doing it by yourself. Having a mentor can be really helpful in terms of like check-in. And half the time, like a mentor's role is to help you filter out the shit. Because a lot of the time that you can a lot of the time you can get lost in the information that you're looking at, and you can start to believe certain things or kind of not be able to connect the dots. And very often a mentor will just come in and just be able to have this kind of bird's eye view of the data and then say, look, you know, you're missing this, or actually, why are you not doing this and this? So they can be really helpful in cutting through the information and the, you know, what you might be kind of bogged down in, and you know, and be able to give some clarity very quickly in an area that you might struggle in. Can you look at silver? Sure. So I think we're back down into an interesting region now for silver. You know, this is basically coming down to kind of the ETH breakout levels. I think that 19 should be holding. I think this region here should be holding now. The downside to this is, if 1850 is lost, obviously you've got to run, get out of the position. Predictions are. It's a little bit, as I said, it's a little bit like ETH at 1200. You know, this is the 1200 zone. If it holds this, it looks really good. If it breaks below the low, I think it's get out of silver and just wait for the market again, because this is such a significant level here on the weekly. All right, so futures open prediction is up. We have the first 1 minute candle on the Nasdaq. Green or red. Bet using channel points. And you know about the curse by now. Many people don't need reminding, as you saw in chat before, right? Not even me bullshitting it by saying I get DMs. The curse is real. People experience it firsthand. You get the answer wrong, week-long curse. Done for a week. Every decision is incorrect. Every trade is the wrong one. Every long should have been a short. Every short should have been a long. The market you choose will stay flat like a stable coin. The market you were gonna choose will pump 30% because Elon bought it. That's the way it works. Yeah, can confirm. Curse is no joke. It's real. Oh, and for anybody that needs a refresher, this is currently how the NAS is looking. Right? This is how the NAS is looking. Slight divergence maybe in here. Clean out of the lows. It's your 4-hour view. Alright. We went 50-50 on that. Good God. Straight down the middle, 50-50. And 286k on both? Wow, we are literally just straight down the middle. I wish everybody the best of luck. And I hope 50% of you avoid the curse. Congratulations, Bears, once again. 3 weeks in a row. There seems to be a pattern to this, huh? Rich Bears just getting richer. They hate to see it. Alright, so a big thank you to everybody for tuning in, sticking through the small technical difficulty in the middle of the stream. It's still relatively soon after a strong period of selling that we've seen in the market, right? This is the summarizing piece. And so I think it really pays at times like these to not be ridiculously strong in terms of your trading back and forth in regions like this. We're in the kind of classic consolidation post larger sell-off. These periods of time can last for, longer than basically you can still remain solvent. So don't get too hyped about trading these regions. Don't start flip-flopping your bias everywhere just because, a 5-minute candle explodes green. This is the sort of market where we tend to see moves retrace very quickly, and it is just designed, as we've seen at the top of this BTC range at 21.5, to just chop you into pieces. So just be careful around this region and over trading it, right? Also keep in mind the kind of story that I like to paint about the market and what I think is really helpful advice for the majority of people. The last significant chapter, if I was writing this down in a book of the price history of BTC, the last major chapter is the sell-off and the breakdown of the channel on the higher time frames. The last significant move of this market is a bearish one. Most markets are trading underneath significant supports or underneath significant pivot points for the market, like ETH at 1700. So keep in mind that the last major move of this market is a bearish one that absolutely crushed through support levels. If we are to flip bullish, if we are to believe that the higher time frame low is going to be in through this region, we need to see some strength back above those levels. Until then, all retests are going to be considered as bearish ones and opportunities to short again. All right. Everybody have a wonderful rest of the weekend. Enjoy the start to the week. I'll be back on Wednesday afternoon. Good luck trading, and I hope the P&L is beautifully green. Appreciate you all again.